Hi everyone, welcome to another weekly market forecast, this one for the week ending February 26th, 2021. My name is Justin Bennett with Daily Price Action, and in today's forecast, we're going to talk about the euro, the pound, the Australian dollar, as well as the pound versus the New Zealand dollar. And we're going to wrap things up with Ethereum or ETHUSD. The euro, the pound, and the Australian dollar look set for higher prices, while the pound versus the New Zealand dollar looks like it's ready to break lower. And of course, Ethereum has been on an absolute tear over the last year or so, and I'm going to show you why I think we could be on the brink of a parabolic move up to $3,000. So we're going to get to all of that in today's video, so let's get to it right now. A quick disclaimer that today's video is for educational purposes only. All views are my opinion and are not intended as investment advice. Forex is a high reward, high risk business, and you should not trade with borrowed money or money you cannot afford to lose. See the description of this video for the full disclaimer. So first up, we have the EURUSD. And for those of you who have watched the last few videos, you know that we had this false break below the 120 handle. So here on the daily time frame, you can see where 120 was the top of this multi-month range back here, and we then got to close below it. However, as I mentioned in that video at the time, anytime you see a daily close below a level like this, followed by an immediate retest, this shows an increase in demand below 120. So this was likely to be a false break, and a false break to one side of a pattern like this or level often triggers an extended move in the opposite direction. Now, we did get a little bit of a pop higher. However, since then, the pair really has just stalled out here. In fact, for the last few weeks, it has been sideways. However, as I mentioned on Friday, if we look at the intraday timeframes, you can see where we have a potential left shoulder over here, a head, and a right shoulder. So this could be an inverse head and shoulders that could send the EURUSD higher. All right. However, buyers have to get above this 121.60 area. If they do, if we get a 4-hour and especially daily close above this area next week, that could send the euro higher back toward the 123.30 area. Note that 123.30 is the year-to-date high for the euro, so it makes sense that we would see sellers come out and try to defend that area. All right, so 121.60 is going to be the level to break. If we can get above that, again, 123.30 is in focus. Alternatively, if we see the EURUSD break below this potential right shoulder and especially close back below 120, that would negate this bullish outlook. The pound looks increasingly bullish after it closed above that 137 level a couple of weeks ago. So ever since we had this close right here on the weekly time frame above 137, all right, this was the level that had to break in order to send the pound higher, perhaps up here toward 143.50. All right, so this is what I've been talking about for a while now. And I also mentioned last week that 140, all right, right where last week closed, could be resistance. We do have a little bit of a pivot back through this area around 140. Okay, so that's going to be one to watch this week. We could start out the week with a pullback. However, I do think that pullbacks here will be bought up fairly quickly. And in the longer run, I do expect to see the pound head higher toward that 143.50 area. All right, so the pound looks really strong right now. And if we do head into the daily time frame, some areas I would keep an eye on would be this area right around 139. All right, so if we do see the 140 area reject the pair early this week, we could see a pullback into this 139 area. That would give a chance for the 10 and 20 EMAs to catch up and could present a nice buying opportunity right there for a move back toward 140 and perhaps that 143.50 area. Alternatively, if we do see a deeper pullback below 139, another area is right around 138.50. All right, so notice how it was support back here and resistance before that. So 139 and 138.50 are going to be a support area that I would keep a very close eye on. As long as that holds, I do think that we see the pound move higher up toward 143.50 over the coming weeks. The Australian dollar has played out perfectly ever since I mentioned this bull flag back here when the pair was coming off channel support. All right, so this area right around 75, between 75 and 76, this was the buying opportunity down here. I also mentioned when it closed back above this 76.40 level. Notice how this was support back here, resistance before that, and the pair closed back above it, which meant that this 76.40 area was support. Now, this candle right here touched off of 76.50, and of course, then we saw the break above this level, this upper level, and that became support. All right, so we saw that through here, and I talked about this on the blog as well. We even had this nice bullish pin bar that formed that did signal at an increase in buying pressure right here. All right, so this candle right here signaled that there was increased demand through this area. We saw a dip again right in that area, but again, it was bought up very fast. So with the pair now above this 78 area, okay, 78 is going to be support. So as long as we see the Australian dollar hold above this 78 area on a daily closing basis, I do like it higher. Now, as I mentioned recently, 79.30 is going to be the next resistance. So for the week ahead, I would expect to see some type of dip early in the week back here toward the mean, which could be right around 78 as the 10 and 20 EMAs come up. So keep an eye on the 78 area. As long as that holds, again, I do like a move higher into 79.30. Alternatively, of course, if we do see a daily close below 78, that could be a problem for buyers and it could expose lower levels, including some of these lows back here. It would also negate this breakout. However, I do think, again, 78 will hold on a daily closing basis. We've talked about this channel on the pound versus the New Zealand dollar before. In fact, I mentioned it back here when the pair was breaking down from this trend line, and our target was the bottom of this channel. We then saw the pair make lower highs into support, which did signal an imminent breakdown, and we got that right through here. Now, this latest bounce on the weekly time frame from the pound versus the New Zealand dollar did see the pair retest this channel bottom last week. Now, if I zoom in, you can also see where the pair carved a weekly bearish pin bar. So notice the long upper wick from this candle. It also closed back below this high. Okay, so it closed inside of the previous week's range. And that is a good sign if you're looking for shorts. Okay, so one thing we could see happen in the coming week, a lot of times, especially when you get this on the weekly time frame, a lot of times you'll see a 50% retracement of a pin bar like this. All right, so if we were to see that, it would mean a retest of this 192.80 area. All right, so keep an eye on 192.80 this week. If we do see a 50% retrace of this bearish pin bar right here, that could be an entry short, and that also lines up with that trend line. Okay, this is the bottom of that channel that we just looked at here on the weekly time frame. And this bearish signal will be intact as long as the pair trades below last week's high. If we do see the pound versus the New Zealand dollar head higher and take out last week's high, that would not be a good sign for shorts and could negate this as a sell signal. Alternatively, if the pair starts to break below last week's low, that could also be an indication that the pair is going to move lower, perhaps back toward this 185 support area. But all in all, just given the look of this over the last few years, it does look like the pound versus the New Zealand dollar wants to head lower. And as long as last week's pin bar does hold, I like the idea of a move lower into that 185 area. And last but not least, we have Ethereum or ETHUSD. So I've mentioned this on Twitter recently, but if we look at the daily time frame, you can see where we had this ascending channel back here in December. And in any other market condition, a pattern like this would signal weakness and actually trigger a move lower. However, cryptocurrencies are in a cyclical bull market, as I've been talking about for the last 7 or 8 months. So instead, we got this breakout above this level, and you can see where Ethereum essentially went parabolic from this breakout and rallied about 75% higher. All right, now if we look at the current price action, you can see where this channel right here, the one with the same color as this pattern back here, all right, right now Ethereum is basically just pressuring the top of that level. Okay, so if we do see another parabolic move from an ascending channel and we get a similar breakout to this one back here, it would essentially put Ethereum right at $3,000 over the next couple of weeks. Now, there are no guarantees that this will happen, of course. I don't know what's going to happen here, but just looking at the price action back here and comparing it to what's happening right now, all right, they do look very similar. And again, cryptos are in a cyclical bull market, so I do expect this to break higher instead of lower. That said, if we do see Ethereum break below this channel, all right, and if I move into the 4-hour time frame, you can actually see how close it got last night. Okay, so yesterday we had a dump right here on the 4-hour time frame. This spanned less than an hour. Okay, so we saw Ethereum move quite a bit lower, but notice where it closed. It closed back inside of this level. All right, so this is the one that Ethereum has to hold above. If we see Ethereum dip below it and close below this support level, all right, that could trigger a larger move, a larger correction down here toward the $1,500 area. All right, that would obviously not be what we want to see as buyers, as bulls, but it could happen. All right, so that's something to keep in mind. But again, I do think that we are going to break above this level just because we are in a cyclical bull market, and patterns like this, especially when you start to see the market testing a level like this and carving these higher lows, okay, a lot of times you do get that break higher. And if we do see a similar run from Ethereum as we got back here, okay, from this channel, again, it would put Ethereum right around that $3,000 mark over the next couple of weeks, which also lines up with this larger channel. All right, so we'll see how this plays out, but I do think Ethereum could have incredible potential over the next few weeks if this does play out and if we can get above that $2,000 area on a daily closing basis. But regardless of what happens here, as you all know, I've been buying Ethereum since it was $200 last year, and I think it goes a lot higher this year. All right, so even if we do break lower, I'm still bullish Ethereum over the longer term because I think that $2,000 and even $3,000 is just the start for where the cryptocurrency can go in this bull market. If you enjoyed this video, give it a thumbs up, leave your comment below, and be sure to subscribe to my channel. See you next time.